Hey everybody, my name is Mark Dannenberg. It is June 3rd, 2020. It's 7 p.m. Eastern, and I have Aaron Rumley with me here tonight for the Q&A session. Hey Aaron.
Hello.
All right, folks, if you're brand new to the Q&A, I'm just going to give you a quick overview of what we do here and what you can expect. We are here to help you learn to trade and trade to earn. Very simply, we believe that trading is a tremendous opportunity for anybody who has a desire to generate an income for themselves. If you have a desire to generate an income, maybe in addition to whatever you currently do, perhaps you own a business, perhaps you have a job, perhaps you just want some additional income, trading is one way that you can accomplish that. We're here to help you learn how to do that. So we'd like to help you learn how to trade and then trade to earn. We consider trading to be very similar to owning a small business. It requires some investment of time on your part, and it requires some monetary investment for you to get started. And it's something that you really need to learn about first before you really start generating the income and cash flow that you may desire. We commit ourselves to responding to questions about trading, about learning. So we do restrict our questions and our responses to those of you who are just looking for clarification, ways to expand your own knowledge of what we do. We'll talk here about profit flow analytics charts, which is the new cycle trading and analytics chart signal set. Excellent for identifying trends. We talk about the Cycle Finder Plus, which is part of the whole profit flow analytics chart for those of you who have attended the masterclass. The live trading room, we can chat more about what we do in the live trading room. Michael and Aaron in particular host the room. Michael's the primary host who's with you most every single day, all day, identifying good entry opportunities, explaining where to be cautious, where there is a good solid entry, and where there are some potential price movements to certain levels, proper levels of support and resistance. Profit Builder Plus, for those of you who may just be starting out seeking more knowledge of options education, is a program that Aaron facilitates, and it's an excellent way to start right from the beginning as to what an option is, what a strike is, what an expiration is, and graduate all the way through to some advanced spread trading education. We do have a futures trading education course also. Most of that is really just built around how to manage your risk, how to properly view futures, understanding the risk and reward of futures. And then, of course, we have one-on-one coaching for those of you who are interested in a more intensive immersion in learning how to trade. If you are interested, you can also follow along with the New Cycle Trading Forum. It's at traders.newcycletrading.com. Craig from New Cycle Trading and Analytics, who heads up programming and development, and his team facilitate the forum. And it's a chat opportunity amongst traders. It's an opportunity for you to connect with other traders, share thoughts or ideas about what you see going on in the market. It's also an opportunity for you to ask questions specifically about the New Cycle Trading and Analytics Profit Flow Analytics chart set, and in particular the Cycle Finder Plus. So this is a session that is really devoted to you. We're interested in hearing what your questions are, comments, as long as they relate specifically to the education that we provide or New Cycle Trading provides. Before we get into that, Aaron does a great job every single day in the live trading room of highlighting just one aspect of what we do. The Cycle Finder Plus, if you've been in our live trading room, or if you've attended the masterclass, or if you've listened in on our Q&As before, the Cycle Finder Plus is one of the primary technical signals that we use to identify the beginning and ending of cycles within the market. So that cycle can be on a 3-minute basis, 10-minute, 30-minute, or on a daily chart. Cycle Finder Plus is an opportunity to see where the cycle begins, where the cycle ends, no matter what time frame you're looking at. So one of the things that we do in the live trading room, specifically for people who don't have the whole day to devote to their trading but are interested in participating in trading, is we, by Aaron, identify what we call Cycle Finder Plus daily crosses. Cycle Finder Plus is a two-line indicator where the lead line crosses over the basis line, and that indicates to us that there's an opportunity to either go short or go long. So what we're doing is we're reviewing a watch list of stocks and cash settled indexes, and we identify at the open of the regular market session each day any Cycle Finder Plus crosses that occurred that day at market open. We announce them in the live trading room, and then Aaron tracks them. So we actually started tracking them at the end of February. This is because it was around the end of January or so that we rolled out the Cycle Finder Plus, and we felt that this was one way to highlight what the power and opportunity is from the Cycle Finder Plus. Now, we use the Cycle Finder Plus throughout every single day, 3-minute and 10-minute charts on futures trades, also ETF trades, and then we also pay attention to 10-minute and 30-minute charts for intraday options trades. So Aaron, chime in here. These are your numbers that you've been tracking. From February 24th to June 3rd, there have been 138 trades that have presented themselves on our watch list of stocks and indexes.
Yes, absolutely. And you can see what our win rate is, which is interesting because we use the profit sweet spot matrix to calculate the sweet spot for each of those indexes and stocks for the daily Cycle Finder Plus crosses. And that's an 80% win rate that we have programmed into the PSSM. But right now, just based on how the market is moving, we have almost a 90% win rate with the actual trades that we've taken.
Yeah, that's pretty significant. And, you know, if you look at the PSSM, if you're not familiar with it, what Aaron's talking about is we use our tool, which has historical data back to January 2019 for each of our watch list of stocks and indexes. And what we do is we, as individual traders, and each of you can set this to what you desire, set the win rate that we desire. And so in this case, you can see here that I'm showing SPX, and we're looking for an 80% win rate. So all that's doing is plugging in a number that allows you to choose how conservative or how aggressive you want to be in your own trading. What that number means to us is that 80% of the time or more, the underlying stock or index moved, and this is the sweet spot number, 13 points. So we can have a reasonable expectation based on historical analysis that the stock or index is going to move 13 points 80% of the time. Sometimes it moves more than 13 points, and sometimes it moves less, and there are losses in these numbers too. 20% of the time you may not win on it. So the number's a little different for each of the stocks and indexes that we track. An 80% win rate on NDX is 42 points. So it's all based on historical basis back from January 2019. So if we go back to this here, we're actually experiencing a stronger win rate, even though we are saying 80% of the time we expect it to win, but we're actually experiencing a greater win rate as of right now, and that's just because of the nature of the movements in the market. Starting the end of February, we saw a very strong movement to the downside. I don't think that's a surprise to anybody. And then sometime around mid to late March, we saw a strong movement to the upside. So where are we going to go from here? We have opinions on that. Michael does tremendous amount of analysis based on wave patterns, and we have some opinions on that, but we will wait and see. We boil it down to a daily decision on what we want to do, what types of positions we want to take. So Aaron, you want to talk a little bit about profits?
Yeah, absolutely. So the total profit since February 24th, assuming one contract, assuming a 30 delta, taking every single daily cross is $24,709 of total profit, which basically equates down to about $338.48 of profit per day. Again, this is based on just one contract, depending on the positions that you're looking to open, the expiration, the cost of the option. You may have more contracts than that, but it's all based on a 30 delta in one contract. So it's my favorite way to trade. It's very easy. 9:30, which ones are crossed, take the trade, set the GTC. You can walk away at that point and reevaluate it the next morning, or if you're an active trader and active at your computer all day, you can monitor it and decide if you want to adjust at all. But it's a pretty easy way to trade.
It's pretty rock. So the variables there are the number of contracts you can trade, and that's based on your personal capital commitment. And another variable is where you're going to place your strike relative to at the money. So we actually show, for your convenience, that if you were to trade NDX, for example, with an expectation of a 42-point movement based on an 80% win rate, that the delta, so let's go down here, if you had a 50 delta and you had a 42-point move, you would expect a 21-point profit. 21 points of profit on one contract is $2,100. Aaron is showing you, just to kind of even things out, not everybody trades at a 50 delta. Some people actually go down to as low as a 10 delta, but just to kind of level set the playing field so that you can understand the opportunity and then adjust for your own personal trading. A 30 delta would mean you might have $12.60 of profit. So just to give you a little bit more detail about what Aaron just said, you identify that there was a daily cross. Perhaps there was a daily cross to the downside on NDX. You would buy to open a put. You know that an 80% win rate has an expectation, probability, not a guarantee, but a probability that the price could move 42 points. You then take the actual delta of your position that you've opened and multiply that times the sweet spot. Then you add that number to your cost basis and set a good till canceled order, and you walk away. There's no reason for you to take any other action that day. Typically, you can walk away with your good till canceled order in place, and you check on it the following day. If the following day you're out of the position, well, great. It might have happened during the day while you were away, might have happened first thing the next morning. If you're still in the position and the crossover is still supporting that you should hold that position, then there's no action that you need to take. If the crossover has reversed, then you would take that position off, and it might be taken off for a loss, and you would look for another position. And one last thing here, this 80% win rate can be set for whatever you desire. Sometimes we look at a 60% win rate, and if we had a 60% win rate, it means that the underlying index, in this case NDX, would be expected to move 76 points. So we've created this, and Aaron just did a phenomenal job on programming this to make it so easy for you to choose as an individual trader where you want to set your desired win rate, how to quickly understand, based on history since January 2019, what that means in terms of a movement of the underlying stock or index, and then you can just simply calculate that times the delta. And one of the last questions, one of the most frequent questions I get, and that's the last thing I'll say about this, is how do I know how far out to go expiration wise? Well, we use these numbers right here. The longest cycle time for the last year and a half has been 21 days. And the average cycle time, meaning from the point in time that there is a cross to the point in time that there is another cross in the opposite direction, the average cycle time is 5 days. I generally recommend that you use those numbers as a guide. You could go out 2 weeks and be comfortably beyond the average cycle time, or you could go out 3 weeks or more and be right on the outer fringe of the longest cycle time. So what that's doing is it's allowing you to choose how far out of how far out of time-wise, you place your expiration so that you don't spend more of your capital than you need to, but based on a historical precedent, historical data, you're going out as far as you need to make sure that you're not using too short of a time frame. So if you were only to go out 3 days and it took 5 days for it to move 42 points, well, then it did successfully move, but you didn't give yourself enough time to let it work. So great tools here. We track Amazon, Booking, Google, Tesla, Shopify, NDX, and SPX as indexes. And we're always researching and looking at other stocks too. Some stocks don't work very well in terms of where we want our price action to be. But these stocks are ones that we look at every single day. And they're all going to be different. I'm showing you NDX, which shows a 42-point sweet spot at 80%. Shopify at 80%. Aaron probably knows these by heart. Shopify at 80% is a 5-point move. Well, that's okay. You're going to have a lower cost basis, and 5 points of movement at a 50 delta is still $250 of potential profit on one contract. So it's a great tool. This is part of the Cycle Finder Plus Masterclass that we rolled out in January, and I just think it is a tremendous tool. Combination of the profit flow analytics, including Cycle Finder Plus, the profit sweet spot matrix, and then the personal trading plan, which guides you to how much profit are you looking to generate on a daily or weekly basis. And you can then project a run rate out for 12 months to see what you could potentially earn as a trader. I look at these tools, folks, as the tools that you should rely on to successfully manage, run your business, and generate the income that you desire from your business. Just like if you had a little shop where you're selling service or you're selling products, you're going to have to evaluate, well, how can I generate the income that I desire? I've got expenses associated with this. How can I be most effective at running my business? We've constructed this in a way particularly geared around the masterclass now so that you can be a successful business owner as a trader. Anything you want to add to that, Aaron?
No, I mean, as I mentioned before, it's one of the easier ways to trade, especially if you don't have a lot of time to trade. You just come to the market every morning, open up a position if there's a cross. If you're already in a position, evaluate if you need to take any action. And otherwise, you have your GTC out there to close the position for you. And what I mean by evaluate if you need to take any action is the past couple mornings, we had held positions into the next day. They didn't close out that same day. The majority of our positions close out in the same day. The past couple days, we've had to hold them overnight, and actually worked out in our favor as the underlying continued to move overnight in our favor and actually opened up higher. The option price opened up higher, so we were able to close out for a higher profit than the normal sweet spot.
I think it was James in the live trading room today said he made, I think, around $5,500 on the SPX trade that we opened yesterday
Yes.
as a daily cross.
Yes.
All right, so I'm going to leave it on the charts here, and we would love to be able to help you answer any questions and continue to learn. You know, as a small business owner, as a trader, you should think about, how can I always be improving my business? How can I adjust my strategy? How can I adjust my approach? How can I adjust my understanding so that I can, I like to believe that one of the goals is so I can trade less and make more. You know, if you're a futures trader and you're trading a large number of trades every day, there are ways to adjust that so that you can generate the same or better profits without taking as many trades. I know a great example today, Michael had a trade on RTY today that ran 32 points. Well, one trade, I think it was maybe two trades, he had 32 points. But 32 points on RTY is about $1,600 just trading one contract of a futures contract. So we try to monitor RTY, ES, and then NQ during the day, and we primarily monitor the 3-minute and the 10-minute charts. And I frequently then will refer to the 30-minute chart just to have a big picture basis. I'm typically not using the 30-minute chart as my primary decision focal point for futures. I'm using the 3-minute and 10-minute with the 10-minute as my primary decision-making point. And sometimes I will back into a 5-minute chart also and just kind of see what the consensus is between the 3, the 5, and the 10. And then if you're trading like we do sometimes options on the stocks, because obviously we're not trading futures on Amazon and Tesla and Google, Shopify, bookings. But if you want to trade options on those stocks, in addition to the daily crosses, we typically use a alignment between a 10-minute and 30-minute chart. We're starting out typically with the Cycle Finder Plus alignment. We're looking for, like in this case, you can see, well, that's SPX, so that I could use that as an example. SPX is in the sell zone. It hasn't crossed down on the daily, but it did cross down towards the end of the day on the 10-minute, and it was perfectly aligned with a 30-minute, also crossed down. And you can see here what happened then right at the end of the day, moved down from 31.30 down to a low of 31.20. So the 10-minute and 30-minute combination and alignment is the perfect combination if you want to trade options on ETFs, options on stocks, options on the indexes. And then don't ignore the lower indicators. The lower indicators can be a great guide, also a reinforcing guide. Great example here is you've got the 10-minute cross to the downside on SPX, but look what happened prior to that 10-minute cross. Back here you had a B entry, fully qualified B entry at 12:30, where you had the profit flow oscillator come on red, aligned perfectly with the AO, and you had the Cycle Finder Plus cross down. So the 10-minute cross down, that's just now a great opportunity to go ahead and take the trade. Right, Richard is asking, I must have missed this. Do you get closed out because you hit a stop or the option expired? So Richard, when we open an option position based on the daily cross, we place what's called a good till canceled order to close for a profit. Now, you can do this, but we typically don't. We don't typically use a stop. You can if you choose to, but all of the historical data on the profit sweet spot matrix that I showed you is based on not using a stop. It's simply either we got filled for a profit based on the good till canceled order, or we ended up closing the trade for a loss on a reversal cross.
And that's why
So,
we don't use a stop, is because we have a signal, a technical signal that tells us when the trade is no longer valid and when to close out. And so if you took a short position and it didn't hit your GTC and you're holding the position, and then you come to the market one morning and at 9:30 you see a cross to the upside, that would be your sign to close the put and open up the call. And depending on how price moved, you might be closing the put for a loss or you might be closing the put for a profit, because if we moved in lower but not enough lower to hit the sweet spot, you might be showing a profit on the position. But either way, once it crosses back up at 9:30, tells you to close your existing put position and open up a call position.
so let me emphasize that a little bit here too. If you have taken the master class and you have your version of the PSSM, you can follow along with what I'm talking about here, or you can just see mine here. Where I pointed out the sweet spot to you, this number right here, that means that 80% of the time SPX moves 13 points from a daily cross. If we look back over the time that we've been accumulating this data, the total number of points accumulated for the daily crosses is 654. 654 points. But if you compare that to the number which is if you were to hold for the entire cycle, which means you don't exit at a good till canceled for 13 points of movement times your delta, you're actually holding until there's a reversal. Well, in that case, it is 3 times the number of points. And so this is where you, as an individual trader, as an individual business owner, make a decision how aggressive you want to be. And here's a couple of examples. Let me just see here. I'll find you one here. So here are 2 examples right here. If you had held for the full cycle on the daily cross to the upside on March 19th, if you'd held for the full cycle, you would have lost 102 points. Now that's a little intimidating. If you have a 50 delta, you know, you're talking about a 51 point loss. Even one contract is you just lost $5,100. But before that reversal, there was a 13-point movement. So you're out of the trade for $650 of profit at a 50 delta. The next trade was on the 23rd, which was a cross to the downside to buy to open a put. If you held for the full cycle, that was a 53-point loss. But if you used a good till canceled order, you grabbed another $650 of profit. So we have people who like to hold for the full cycle because they are aware that the overall number is 3x the sweet spot number. But I'm going to just tell you right now, it's easy to look back at this history and go, oh, well, I definitely want to hold for the full cycle. Look at that, I can make 3 times the money. You have to ask yourself the question and be completely honest with yourself as an intelligent business owner. Can I tolerate the emotional strain of having in 2 trades losing 155 points? Now, the other side of that coin is, here's a trade on February 18th that if you held for the full cycle, you had 394 points of profit. So holding for the full cycle has a much greater level of emotional volatility to it, but overall the result is much better. We encourage you to start out using the sweet spot because, and here's another example, on NDX, we encourage you to use a sweet spot because this has a lot of emotional um, volatility associated with it. But on NDX, it's 3x holding for the full cycle. Shopify is not quite 3x. You know, Tesla is, wow, Tesla's 947 holding for the full cycle versus 227 exiting for the sweet spot. So here's the way to think about that. I can open up my shop. I can put my salespeople out on the street as a business owner, and I can tell them just come back with the biggest deals. And you might get, you know, a couple of big deals, and it might take you months to get those big deals. It might take you longer to get those big deals up and running so that they can generate revenue. But you could have your sales force bringing in a whole bunch of smaller deals that are profitable, and you're generating revenue and income more quickly, more immediately, where you are in and out of the trade, and you're not keeping your trade open and subjected to continual risk. But you can see pretty consistently. Now, Google is not quite the same difference here. Booking is 800 versus 1800. Amazon is 400 versus almost 1200. So those are other factors to consider. But bottom line is, when we talk about it, we almost always talk about an 80% target win rate, generating the sweet spot, and then whatever the delta is, and then place a good to canceled order to close. And Stephen's asking, do you use a bracket order to enter a trade, specifying entry, target, stop loss, prices, or ticks in the trade ticket? No, we just simply buy to open the call or buy to open the put. After we are in the trade, we immediately pull our numbers off of the PSSM and we place an order then to sell to close. Now, like I said, an individual variable for you, Steve, would be, if you're interested in this, is on your closing order, you could always use a bracket order. Maybe you want to limit your exposure on a certain trade to a certain dollar amount. You could use a bracket order to set a stop loss, but have your profit exit on that bracket order set based on the sweet spot. Just remember, all of the data in the PSSM from January 2019 forward is based on not using a stop. It's simply you are out of the trade for a profit, or you are out of the trade on the next reversal, which would most likely be a loss at that point. But we know that 80% of the time, based on history, we have a probability of winning. Cliff is asking, are all the trades from daily crosses still being sent via the Trade Alert app? we have we've never sent the daily crosses via the app. It's something that we provide, we call out, we help people identify in the live trading room, but it is not an alert service. We don't we don't currently have an alert service, but we do update in the app positions that we might be holding that we've called out in the room. So we will periodically identify specific trades that we might be holding ourselves. And we do that as an example. But most of the time, Cliff, our mission in the live trading room is to help you learn to recognize a variety of variables that exist in identifying a trade entry and when it would be most appropriate to identify an exit. We want to show you um, the signals, 3 and 10 minute signals, help you recognize, this might be a good setup to go short if you're trading futures, or to buy a put option if you want to trade an ETF on it. We might identify if you are long, hey, this is a time when you might want to think about exiting. So we're more articulating the variable ways to recognize how to use most effectively the tools of your business. And then in addition to these tools, Michael talks extensively about divergent bars, which are identified on your price chart, and talks about fractals, and then also talks about wave counts and potential price targets. So while we wait and see if there's any other questions, let me just share with you something we talked about this morning in the live trading room. There's always debates, different analysts talking about which way is the market going. Is it going higher? Is it going lower? Here's a daily chart on the S&P 500. Okay, you can see very clearly back here at the end of February where the sell-off started. You can see now in hindsight where it ended. It ended on March 23rd. We know that very clearly from our technical signals. We can go back and we can see, well, we had a technical cross on the daily. Looks like that occurred on the 18th of February. And of course, we know what happened after that, right? If you were holding for the full cycle, that was a pretty nice trade right there. We also can see that there was a minor little move to the upside here that interrupted that full sell-off, and that was identified by the Cycle Finder Plus. It was also reinforced by the original Cycle Finder. We see that this move to the upside that started on the 23rd of March was actually forecast by actually the upside movement started the 24th. That was forecasted by a cross to the upside on the daily Cycle Finder Plus. And all these little movements up and down, are these movements here. So one of the questions that we get frequently is, where are we going from here? This is what a lot of analysts debate and write about. This is my opinion. Qualify it as my opinion, and Erin has her opinion. She can chime in here too. Cycle Finder Plus is a technical signal that we believe is a very powerful indicator of the beginning and ending of cycles. We are in the sell zone. We are up around 95%. We are in the sell zone. We have not seen it cross down yet, but when it does, I believe there's going to be some sort of fairly significant movement to the downside. So one of the things that I did today is I backed up, and I also took a look, and this is unusual that we do this, I took a look at a weekly chart. We don't trade off of a weekly, but if you just backed up and you wanted to understand a little bit more about the power of this technical signal, the Cycle Finder Plus, just look at where the crosses occur, where the movement lower is indicated, where the cross to the upside is indicated, and compare that to the price chart. And just visually, you can start to see how powerful that indicator is. This is a powerful indicator. Now look at what happened, right? We all know the history now. What has happened since February is now history. It was not anticipated, but it was forecasted for us by a pretty powerful technical indicator. We've moved quite a bit higher. We're now back up in the sell zone. Where are we going to go from here? If I based it 100% on this one technical indicator, I'd say we're going to go lower. If I take a look at NDX, which we talked about this morning, and Michael weighed in with some of his wave analysis, look at where NDX Cycle Finder Plus is, top of
You
the
said
range.
we're only going to move 800 points lower,
He
though.
said we're going to move. He said his forecast is that we will move about 800 points to the downside. When will that start? I'd pay close attention if you're in the live trading room when Aaron tells you that we've got a Cycle Finder Plus cross to the downside on the daily chart. But you can just go back and study, folks. This is like studying your business and understanding more about the tools that you use. Cross to the upside, strong move up, and even some of these more minor moves, cross to the downside. Well, that was a minor move that moved down 250 points in that week. Remember, we're on a weekly chart. Yeah, Aaron, I think what he actually said was, yeah, we're going to pull back a little bit
And
first,
then move higher.
and then go higher.
And then he told us what a little bit was.
Well, he gave the number, and you said, wait, but that's 800 points. That's not a little bit.
And then I pointed out that NDX's sweet spot's only about 42 points, so
Yeah.
that'll be just fine.
But that's true, that his analysis, which is generally spot on, shows we will pull back as much as 800 points and then move higher and take out the high. So if you follow along with the signals and Michael's articulation of those movements, there's tremendous opportunity. Can't guarantee any of that, but just look back in history over what has occurred. Just let us know if you have any other questions, folks. We'll be here.
Something else that we could talk about is how different the NQ, RTY, and ES were today.
Can I just tell you, NQ was a little annoying at the beginning of the day.
Well, look at that 10-minute chart. Even look at the 30-minute chart.
Mm-hmm.
The AOs were just back and forth and not really showing a great trend there. We started to get into a trend later on in the day. If you want to just move your 10-minute earlier to the day. But that morning as it started off, just, yeah.
All this back and forth. Couldn't make up its mind.
Which looks completely different than you could show ES or RTY because both of them were pretty identical.
Well, let's look at RTY because that was like a rock star of indexes today.
Absolutely.
During that same period of time when you had all that choppiness on NDX, look at this. It's just solid, nothing but movement to the upside. And then using the upper and lower indicators together, you have cross to the downside on the 10-minute. It was aligned with the 3-minute, but you also had AO printed red at 12 o'clock.
Oscillator.
B entry on the oscillator, which is a red bar following an original cycle finder red. And then on the next, well, on that same 12 o'clock bar, no, sorry, then we confirmed that with what would technically be a C entry on the 12:10 bar. And we got some nice movement off of that 12 o'clock.
Absolutely. And you can see that 10-minute, that trend consensus is just showing constant blue bars. I know they're light and dark blue, but all through that time too, as we continue to move higher.
Right
And
here.
then trend bias too was all up to the cross to the upside.
Mm-hmm. Very different picture today.
Absolutely.
And I think that's why RTY produced 32 points, $50 a point, $1,600. That's a nice number right there.
And if you look at the 3-minute, because we look at 3 and 10-minute alignment, you're gonna have to go way back to the beginning of the day.
There you go.
So you can see there were some crosses, there were some follow throughs short term. We did, because of course we don't just go straight up, even though the 10-minute looks like that's exactly what we did. There were some little moves to the upside, or little moves to the downside, but overall we were continuing to move to the upside. And in my opinion, what's really telling is that oscillator, the profit flow oscillator. It was very back and forth. There were very rarely more than 2 bars together, or even just 2 bars together, until we started to reverse and start to move a little bit lower.
But a little different picture on the 3-minute. Oops. I didn't want to do that.
Go up to the top by publish, top right, and hit the one to the left of that.
Thank you, tech support.
All the time.
Thank you,
all
tech
the
support.
time.
Very different picture on the 3-minute than the 10-minute, which is why I strongly encourage in the training, in the masterclass, as well as in the live trading room, that you find alignment between the 3 and the 10. You want alignment between the 3 and the 10 to take your signals. And the more you look at the Cycle Finder Plus alignment and pay attention to the lower indicators like the AO and the oscillator, the more you can line up your trades. Ed is saying, did you not used to use the 1, 3, and 10-minute charts for intraday? We used to quite a while ago, Ed, but the 1 minute is just, it just creates really too much chop for you. The 3 and the 10-minute, and particularly the 10-minute, smooths out the signals. And that's also based on a very personal philosophy I have. Now, there's nothing wrong with using 1, 3, and 10, because I believe that the Cycle Finder Plus and all these indicators work just as well on any time period. But my personal philosophy is I don't need a lot of trades. I'm looking for the strongest and best trades, and I want to take what I can out of those trades. But I also use the trading plan that many of you have purchased from us, and you can plug in your plan number. So maybe you think you need to make 50 points every day on NQ, but when you plug in your plan numbers and you see, well, if I averaged 10 points a day, trading, starting with just 1 or 2 contracts, and let the plan graduate naturally for you and tell you how many contracts to trade every day, that number can grow significantly beyond what you anticipated was possible. So we use the plan, we use slightly longer time periods using the 3 and the 10, and we do the best job we can then to look at the big picture over a 12-month period. But there's nothing wrong with using 1, 3, and 10. You can do
Especially
that.
if we start to see what we were seeing at the end of last year, where, or really the middle of last year, where 3 points on NQ was huge on some days.
Yes.
We,
Yes.
I
Wow.
mean, it was, and that was on a 3 or 10-minute bar. We just really weren't seeing strength in the movement, unlike now where a 3-minute bar can go 20 points. So that might be a better opportunity to use the 1 minute, and is when we were using the 1 minute, because we just were looking for the earliest opportunity to get in, because the profits opportunities were just smaller, because we happen to be a little bit more of that sideways movement than the nice cycling movement that we're seeing right now.
Yeah, NQ is not as productive today, but one of the things that Aaron and I have noticed, because we pay close attention to NQ, is in the last several weeks, I'm going to give you a generalization here, folks. I want to admit up front it's a generalization. I don't have specific factual data on it, but it's just a generalization based on observing throughout every day trading NQ. NQ frequently, and I would even say more often than not, moves 10 points off of the entry, the aligned entry. And that aligned entry could be a 310. That aligned entry could be a 5-minute with EAO. It could be a combination of factors. But it frequently moves 10 points off of the entry, and then it reverses. And frequently after that, it might move, an additional 20 points or 30 points. But we're in an environment where it seems to be very comfortable to use a 10-point trailing stop trigger. Aaron was joking about maybe a year ago, it seemed like we just barely had movements. I was trading some days using a 3.5-point trailing stop trigger.
Yeah,
Just
same here.
because
That's
it
what made the most sense at that time.
wasn't moving that much. So this is a powerful set of indicators that New Cycle Trading has come up with. And it's up to us as trading business owners to really hone our skills on how to use them. I personally think the live trading room is the place to do that. There's ongoing real-time discussions between Michael and the group and Aaron and myself about how to leverage the most out of these. Pamela is asking, are you still working on the Divergent combined with the Cycle Finder Plus? That is still in discussion, Pamela. As we got into it a little bit more, there were some things we were concerned about, some things we felt that we should do, some other things that we felt originally we were going to do, but maybe we felt we shouldn't do. So we will release that once we feel that we have something that makes sense. But for now, it's very, very simple to have the divergent bar on your price bar and have the Cycle Finder Plus separately. The purpose of doing the advanced Cycle Finder Plus was to also layer in a measurement of the strength of the divergent bar. And so we have some thoughts about that, and it may create a level of complexity that I'm not sure we really want to introduce, but based on that, we're still having discussions with Craig and his team about that. But I appreciate you asking about that, Pamela. Folks, I don't see any other questions out there? Aaron, do you have anything?
I don't.
All right, so I just want to say I sincerely appreciate all of you being part of our community of traders. I believe, I just believe so firmly in my heart that if each of you look at this as a business, it's not just something that you're playing around with, but if you look at it as a business and you think about it as a business, where can I most effectively invest my business resources to generate the level of income that I desire, and how do I track that level of income? That's why we created a trading plan for you. How do I know that when I'm making a decision, I'm basing it on something more than an emotion? That's why we use these technical tools that we do, and why we built the data in the PSSM that we did. We're trying to line up a set of very simple tools for you to use to then go out and plan and forecast the income that you desire to achieve, and then recognize how much capital you need to invest in your learning, in your tools, and then in your capital commitment to your trades in order to achieve your desired income. That's all it is, folks. It's math, it's tools, it's a business. And we're grateful beyond words that you trust us to help you learn. So thank you for being here. We appreciate all of you. I always appreciate Erin. She's just phenomenal at helping to create and being really kind of the rock of creating the complexity of some of the tools we have and making them easy for each of our clients to use. So Michael's not here tonight, but really grateful for him and his commitment and passion for helping traders every single day in our live trading room. So I hope all of you stay safe in whatever you're choosing to do, wherever you're choosing to be. We're a very interesting period in our society right now. So stay healthy, stay safe, and we'll look forward to trading with you again tomorrow. Thank you, Aaron.
Thanks, Mark. Thanks, everyone.